Hey there, my name is Michael Blanc, and if you want to learn how to get started with apartment building investing, you are in the right place. In today's episode, I'm going to talk about the instance when you might want to overpay to get into an apartment building deal. So, we're taught that we should never underwrite a commercial real estate deal based on future performance, always on actuals. And this is great advice, but sometimes it doesn't quite match reality. What am I talking about here? Let me make an extreme point, be extreme to make a point. If there's a building, 10-unit building that's completely empty, it's got zero income, then totally the net operating income is probably negative, right? Because you're still paying property taxes on it. So therefore, if you apply a cap rate to that, the seller should actually pay a buyer to buy the building. It doesn't happen, right? It still has some kind of inherent value. So how do you reconcile that? What do you do about that when when you have a building that's got problems, a value add deal of some sort, and the normal rules start breaking down? I mean, let's suppose that the rents are 20% below market, or let's say the vacancies are 25%, and it's got some kind of problem with it, right? So when you go into it, your cash on cash return is going to be low. It's going to violate all kinds of rules and set off all kinds of bells, right? So, but what if you think that within 1 or 2 years you can add significant value to that? So, in other words, you might actually have to overpay to get into a deal. So you might be getting into something at a 4.5 cap rate, which is outrageous because the market's at 7.5 cap. Oh gosh, you're overpaying. What are you doing? What are you doing with that? You don't know what you're doing. Well, it's true. You may not know what you're doing, but in the case of you're buying something at a 4.5 cap, and it's got problems like I just described, when you actually fix those problems upon stabilization, you actually make your overall return, and it could be very, very attractive. So how do you reconcile that? In other words, when do you overpay? I have four instances or rules of thumb to guide you when you should overpay and when not to. So the first rule of thumb is don't be too greedy or too proud. And what I mean by that is we all are a little bit arrogant about our trading rules and what we think is right and unreasonable, right? So we're kind of idealistic. We're not doing anything under an 8 cap. We're doing this, and we're very set and looking for a deal. The problem is when you do that and you stop being creative, it actually limits your ability to get deals, right? I've done maybe of all the deals I've done, including all the house flips, there's like maybe one deal or maybe two at the most that was a complete no-brainer. Every other deal was it's basically operating in the gray zone, and if you're too set in one way, you just won't get any deals done. So rule number two is let your investment criteria tell you how much you can overpay. And what I mean by that is you really want to model a situation and determine the average annual return. So if the cash on cash return is very low because you're fixing a problem, but how does that jive with the cash on cash return in 3 years, or when I sell for a profit because I'm forcing appreciation, right? So get yourself a good financial model, and I have one available. Just search Syndicated Deal Analyzer, and it's very affordable, and it very quickly tell you what is the average annual return of a deal. So let your investment criteria look at the overall average return to tell you how much you can overpay. Now, rule number three is adjust what you're willing to overpay based on the risk. Okay, so in other words, if I'm buying a stable asset, I might want to look for a lower average annual return than something where I have to do a bunch of work in. So that, again, if your normal deal, let's say you're looking for a 12% average annual return for the investors, and now you're getting a deal that's 30% vacant and a bunch of renovations need to be done, you got to do much more work, well, then your line in the sand might be something more like 15% average annual return. So for the additional risk, the investor should actually make more money. So again, adjust your line in the sand if you're going to do a value add deal. Number four, you can overpay if you get terms. So sometimes I'll get a seller two scenarios. One is a all cash offer, which is going to be lower, or if the seller is willing to hold a note or do some seller financing, I will actually increase the purchase price and possibly even give an asking or above asking because I'm getting terms from that person. So, and again, that all flows into what is the average annual return if you get a mortgage or a seller finance mortgage. Because you're using more leverage, it actually increases your returns, which means you can increase your price. So understand that as well. But when you get terms from a seller, you can actually, quote, overpay, become more competitive. So while it's definitely more conservative to underwrite deals based only on actual performance and sticking to the 8% cap rate or wherever it is, certain value add deals allow us, nay, force us to overpay, because otherwise, if we don't, then we never get into any kind of deal. And in fact, even if we do that, even if we quote overpay, we can actually still make fantastic returns. So as long as it meets your investment criteria, your overage return, don't be too proud or too greedy or too set in your ways. Otherwise, you might not even get into any kind of deal. Now, for all those of you who disagree with me, that's fine. Let me hear from you below or wherever this video is. There's, I'm sure, a comment box, and just let me know what you think about that. Love to hear from you. If you're interested in finding out more about apartment building investing, just click on my profile below and you can see a list of all my previous apartment building investing resources and blog articles. If you have any kind of questions or comments, let me know below. Love to connect with you. All right, guys, appreciate it. Talk to you next time.